Hello, we're going to look at better entries today. Roll the intro and I shall tell you. Hi, welcome to the channel. If you haven't been here before, my name is Langers and I am the overgrown child that is the Scruffy Trader. What I'm trying to do is kind of put trading in the real world. Maybe show you a trick or two along the way. That sounds good? Please click the little subscribe button, smash the like, and if you want to see some more trading content, click the little bell icon as well. Genuinely helps. So what do I mean about entries? Because surely that's the easy bit. You just click a button and away you go. Well, it is and it isn't. You see, just because you've entered the market doesn't necessarily mean you've entered at a good time. Bear with me a second, that's the scruffs kicking off. Just turn that off. And I'm going to try and touch on that a little bit. But talking of touching things, I see something out the corner of my eye.
You've got good eyesight.
Good eyesight. Get a look at this. I touch that all the time. Yeah. Sorry. I was going to have a moment there, but I've just had one. Sorry. You see, I might laugh and clown around, but you need to. You need to relax your mind. And that's part and parcel of trading. You see, if you're intent on the markets all the time, sometimes you miss the crucial element you're looking for. And that could well be your entry. For me, I'm always looking for a coffee, because we all know Scruffy loves a coffee. But let me try and put it into context. So you have a level there, and that is your entry point. Amazing. Off we go. What are the odds of you being in the right direction at that point?
Well, we're waiting.
I'll pause just to give you a little bit of thought. It's actually 50%.
No way!
At that moment in time, it is 50%. Okay? And if that was in the middle of two levels, so you've got a level here and a level there, and you entered bang in the middle of those two levels, your hit rate is 50% because it can go either way. You don't know, but you need to add layers of information to help you get in. And I know you're scratching your head and you're going, eh? But it's that simple. What you're doing as a trader is you're trying to put the odds in your favour. A little bit like a casino. You see, when a casino has a roulette table, the natural sort of way of looking at roulette is it's 50-50, red or black. Very simple. However, on the board, there is normally one square that is white, sometimes even two. But that alters the situation from being 50-50 to 48.
Matron, take them away!
And then what it means is the house has a 2% edge. So you're trying to give yourself an edge. And a very simple way of doing it is with a moving average. And I know you hear it all the time, and this is kind of a way to use a moving average to your advantage. So if you have a moving average working its way up like that, okay, and in this instance it is an 8 moving average, and that'll become relevant later because I've actually got a trade running right now that I was discussing earlier with somebody I was speaking with. and I wanted to show in real time for him what an 8 EMA can do and also what a continuation pattern can do. And the only way I know how to back that up is to do it real time. So that's what I'm doing, and then I'm jumping onto the whiteboard to try and explain it a little bit. So I have my 8 EMA, I have a selected entry point, and at this moment in time it's 50-50. Well, what if this is a 5-minute chart? How much relevance does that have? Doesn't have any. None whatsoever. And this is where I think a lot of guys get caught, because they only look at a 5-minute chart. They don't look at the bigger picture. And it could be an industry thing. There's so many glossy adverts saying you're going to get rich quick, and they only ever show the quick action 5 minutes. Yeah, you get it, poof, poof, poof. But it doesn't show the big picture. If you look through some of my older videos, certainly my trading videos, the trades last hours because I come from a higher time frame. If you're trying to get in and out on a 5-minute, you're not seeing the bigger picture. And the bigger picture here is that one moving average, that 8. So you can have a 4-hour, and you want your price to be above the 8 MA. You have a 1-hour, and you want your price to be above the 8 MA. So you've now got 2 confirmations. Right? Is it above on the 4? Yes. Is it above on the hour? Yes. So when that crossed at that point, do you think you've still got 50-50 as your odds? Probably not. You've actually stacked that to maybe 60%.
Splendid girl, and so helpful. Do you know she's been showing me how to stick the pole up?
In your favour. So you've now got a 60% chance just using that MA of getting up there. Sound simple? It really is that simple. And the reason why I've drawn that like that is because it's exactly the setup that I'm going to show you live. And I'll put that on the end of this video. But there's other elements to this as well. You see, you could enter here with one position. So that's position 1. And we're going to assume that you have a £5 position size. 5. So that costs you £1. Just start it off, because ask yourself this question. How many times have I gone into the market, it's gone 2 or 3 pips for me, and then immediately gone against me? It happens all the time. So let's just say, I'll use a red pen so we can see the difference. Your price is moving up like so, and it's tagged you in there because you're above the MA and you're at a level you want to. But then the price starts moving down. Who says you can't put a position number 2 here for another £1? Your stop's still going to be here. Stop out the way. That stays the same. Alright? You've now got 2 positions running at different prices. So is that a better entry than that one? Yes, of course it is. But you've still used your same basis to get you into the trade. Because all you've done is, because that MA may have curled down and you've just waited for it to close above it. And you get in. But then again, could move further down to here. So you've got a 3rd position at £1. So you're now running at £3. But you can go to 5. But if each one of them turns round, and comes up to target, they have paid you a lot more than what you would have had if you'd started here with £5. Just simply because you got in at a better price. And that's kind of what I'm driving at with getting in at a better price. And sometimes some little tricks can help you. You know, I'll just get rid of this. This was just like a rough example, badly trying to explain as to why I was going in on the middle. But let's just say you are about to enter the market, right? You've done all of your analysis, everything like that, okay? And you believe your direction is correct, okay? But you're still asking yourself, but every time I go in, it goes against me and I struggle to get 2 or 3 pips. Well, there's a number of elements. You could be looking at the wrong time scale for what you're doing. You see, if you're day trading, you take your information from a 4-hour, an hour, but you enter on a 15 and a 5. If you're entering on an hour, sometimes the trade is already completed by the time that hour candle's closed, which is why you get the idea from the hour, and then for the next hour, you're looking to get in on your 15-minute or your 5, okay? But try this exercise, and it might well help you. You're going to get in at this point for whatever reason, okay? So there's your 5-minute candle. Don't enter the market at all. Step back. Let the next candle print. Okay, so that's one candle. Now it might print higher. And then you'd start kicking yourself going, oh, I've missed a few pips. I've missed this out. But the distance from there to there might be 4 pips. Nothing in the grand scheme of things. Because how many times does this happen to you? You enter there and the price just goes down, and instead of 4 ticks, that is 40. Because you got in at the wrong time. Now, if you apply the principle that I was talking to before, you could get in above there, above there, above there at a far better price by breaking up your order. Okay? And then it may well turn round. I'm not exactly an artist, guys. And there is your target. So your extra entry points have paid for this. Well, that kind of makes sense. It's a way of averaging in. The trick is always to have your stop same place. All right. But what I was saying about letting the next candle print was, gives you time to breathe. Make certain you're making the right choice. Because if that printed up there, and then you put your order above it, that wouldn't have triggered. You would have then watched the price come down, and you can get a better price just by waiting 5 minutes. Because again, ask yourself a question. When it goes wrong, how long does it take for it to hit 20, 30 pips the wrong way? Not long. But how long does it take to recover to get it back up to target? Take it a few hours. So it was really 5 minutes, that much. Not really. It's why you see me with my toys around my desk, and why the guys in the Telegram will certainly tell you I put up a lot of music videos on there. It's because I'm amusing myself. And normally when a video goes up, it's because I'm looking at a position I want to enter. But I step back. I'll watch it. And that gives me 3 or 4 minutes grace just to compose myself, have a sip of coffee, and then enter the market. It's very simple, but it's amazing how powerful that becomes, you know, because just waiting that 5 minutes can get you a better price. Because in this example, you were going to enter here, you've waited 5 minutes, then it went down, so you're now entering here, move down, you're now entering here, move down. This candle triggers you in. Look how much extra profit you've had just by waiting. And it's amazing how trade management can do that for you. It's just thinking that little bit extra outside the box. Okay. And another simple way of doing it is, if you've got a stop loss at 20, instead of entering here, think, right, I'm going to enter there. No, I'm going to move it down 20 pips, and I'm going to enter where I'm going to put my stop loss, and then put your stop that 20 pips down. What you've done is you've actually increased the depth of your trade, and if you're getting stopped out all the time, it might actually give you that little bit of edge that I first started talking about. So let me jump onto the charts, and I'll show you a live trade based on the first thing that I drew, because I have entered between two zones at a predefined center point. Okay, and we'll see if it plays out. Okay guys, so this is kind of an example of what I was talking about on the whiteboard. Now I've got a number of positions in, they're all in now, I'm at full whack. But what I'm basing it on is a 4-hour and a 1-hour chart. All right, got my levels in. You can see they're all nicely respected price action. That's an 8 EMA, so the price is above the 8 EMA. And I've had this trade running quite a number of hours actually. I got in around lunchtime, and I actually told the guys that I was going to do this earlier on this morning. Here's a screenshot of the video I did about the continuation. And the continuation is based on the overall trend. Okay, so even though this looks pretty bad, and it is, because if I get it wrong and it goes through that red zone, I'll be like a little bit naughty here. I've still got a little bit of wriggle room because I can still put an extra position in if I want. I don't think I will this late at night. It's now 5:20 and I've been busy all afternoon, and I actually dropped a clanger on this because if I had seen it start to reverse, I would have pulled the plug, but I was tied up and I missed it. So now I'm having to manage my way out of it. And as you can see, it is now, this is the 5 o'clock candle. It is dipping underneath this 8 EMA. So it's actually a little bit concerning for me because I wanted it to be over before that. And if I wasn't on being busy, this candle here would have knocked out a couple of positions enough to have paid me, and I could have decided to have killed the trade around 3:30. But life got in the way, and that's what happens. Okay, so I'm going to drop this onto a 5 minute and give you a rough idea of what's going on. Just bear with me a second so you can see the stacks. Just a little bit neater. There we go. There we go. It's a little bit neater to see. Now, my idea of the trade is between the zones. You know I use zones on a regular basis. So there's a zone, there's a zone. And when I was talking on the whiteboard about a center point, there is the center point there. And as you can see from earlier on this morning, it has just danced around this all day. It's just been one of them grinding days. Because as much as you see the land of make-believe, and they're making you think you're in and out, in and out, in and out. The range all day of this has been from there to there, 25 pips. Now, to catch the tops and bottom of each one of them is incredibly difficult. So it was a continuation I was looking for. And it's going to hit either that or that. And because of the greater trend and various other things I was looking at, the top end seemed to be the better of the two. However, at the minute, it's not exactly looking good. So, what do we do? Well, it goes back to what I was trying to see on the board. My stops are in the same place. So if I had gone in at 25, 30 point here, I would be in a real world of hate now. I really would. Because I've got nowhere to go. I've maxed out my margin costs. So I've lost opportunity. And that's another thing. When you're dealing with your account, if you max your account out, one, you've got no wiggle room to try and work your way out of a trade. But secondly, there's opportunity cost. You're missing another market if it sets up, and that other market could pay off your bad market. So that's one of the things, and it's kind of why I have like 2 day trades running at any one time, and one will offset the other if it needs to. But at the minute, it's a little bit hairy. But I still have good belief this will rise up. If it does rise up, these 2 positions here will pay on the way up into where these are. So even if I got these out here, these 3, at break even, these 2 would have covered my wage. And it was the same position size. I just broke it up, you know. Don't get me wrong, I have a good size account and it can take it, but this is a little bit scary, all right. But it also shows that the markets can be quite flat and cruel at times. But as long as you're prepared for it, that's fine. But look, yes, it's pushed down. I don't need the 8 EMA on here anymore. Just get that out of the way. But it's only really coming down to where it's been before. Okay, so it's kind of this area here. So if I put a little dotted line in for you, let's have a look. So there's the lowest it's been. Okay, so let's have a look. Right. So when you frame it like this, all it's really done is come to the bottom of what is clearly a range. All right. And when it gets to the bottom of a range, it bounces up. So if that actually comes up, picks that up, and gets to there, I'm in the money. Simple. And that's kind of what I'm going to manage on. However, if it gets down here, then it becomes a different kettle of fish. But I'll just do what I always do. Sometimes you get caught and you have to sit on it and manage it. And as long as you manage it in an informed way, which is what I'm doing, you'll be fine. You know, sometimes can't always be a bed of roses, guys. And this one certainly ain't, because I dropped a clanger. I should have been out of it here. But I missed the opportunity. Okay. And that's just part and parcel of my phone pinging all the time and sometimes you make a mistake. Only human. But fortunately, I don't make that many. Just so happens when I do, they're pretty horrific. So let me manage this out and then I'll come back to you. Okay guys, it's been a long old day, and I've had to sit and manage this, well, as you've seen, for quite a while. It's now 8:30 at night. This should kind of show you roughly what time it is. There it is. That was the 25. This is the 8:30 candle. Now, if that pushes into this trend line again, I'm just going to kill the lot, because it's managed to a point where it should still be in a profit. Look, it's pushing in now. In fact, what I'll do is I'll keep an eye on it on this screen. Right, that's it. I'm going to kill them all off now. Where's my positions? There we are. Go. Close all. That's it. All right. What a day. What a day. You can't always have winning trades, but what you can have is a managed trade, and that's what you've kind of seen me do today. All right, and I'll just pull that up. There you go. So some losses, but as I was trying to explain earlier on about managing a trade in, and I'll quickly come back to this and I'll show you. I have a series of zones that I use. Okay, so as long as the price was between those two zones, I am happy to add orders in, take orders out, etc., as long as it stays between them. And as you can see, the range is, let's have a look. I'll show you what the range is. So that's an 80 pip range. Okay. So yes, you can have a wide stop and still stay contained between these two. Okay. And when I'm looking at stops, they are completely separate to my take profits. They are. And I think about them in different ways. And it's just the way I am. It's just how I control my trades and how I manage my trades. Okay. Eventually there gets to a point where enough's enough and you have to kill it. And that would be on the other side of a thick zone. If the price breaks through that, how much more pain do I want to take? Well, not a lot more after that, to be honest. And that's when I decide to sort of pull the plug. You know, I do have a hard stop a little bit further down, which hurts me even more. And an analogy that I've made before, and I was talking to Ian today, is I know a car has airbags, but I'm hitting the brakes before I hit the truck in front to trigger the airbags. So that's all a stop is to me. You should be mentally capable of managing your trade out or just killing it. Because you're better off losing 300 than letting it run down and lose a couple of grand. You know, because that's what happens. You fall in love with your trade, you won't kill it, and you just let it go and go and go. Now, on today's subject of entry, what I was trying to explain, maybe badly on the whiteboard, was if you just start your trade small, and as the price inevitably moves against you, because it does, it's what always happens. Hold on, I'll just flick this off. Bear with me. That's better. As the price inevitably moves against you, you can then add into it. But as long as your stop is in the exact same place, and what's happening is you might just be putting in a little bit of your trade, then the next little bit, and the next little bit, and the next little bit. Each one of these little bits moving further closer to your stop is cheaper. Because if you go full hog and you enter into the market with a full position and it goes against you, you've got nowhere to go. You have to ride it out. Whereas in this case, I staged in as it went down, and then when it turned, because I still had belief that the trade was going to do what I thought it was going to do. And this goes back to what I was telling the lads this morning. 10 o'clock in the morning. There's a screenshot of the video I put up about a continuation. Now, I put that up around 10 o'clock in the morning. I entered into this in lunchtime. And the conditions have not changed, because that continuation was part of these zones. It was contained within the zone. So the idea was still correct. Held my conviction, held my nerve, which, although at one point I did think I drastically got this wrong.
Prophecy caused all this trouble.
But it happens, and you just have to manage out of it. And then that's what you've just seen me do. I managed out of it. It came to a point where it was in profit. I put a little parameter in that is it. If it breaks that, you have to put the brakes on, because it's getting late on at night. If I let it run much further than 8:30, once it goes to 9 o'clock, the spreads widen up. And any profit that I have on the table at this moment in time would disappear when them spreads widen up. So it's a case of do or die, if you like. And I'd rather kill some trades and lose a little bit, but have the main trades paid off. And it goes back to what I tell you guys all the time. Start with 0, but end with 1. And it doesn't matter what happens in the middle. So yes, there's losses. but it's just part of the game. All right. To me, that's one trade. You might have taken 6 trades today and ended up with the same result. This is no different. It's just the way I do things. So there we go, guys. I hope this all helps. I hope it kind of makes sense. If you've got any comments, queries, happy to talk to you below. My contact details are in the description. Very easy found. Happy days. And as always, guys, do what you love and the money will follow. See you all in the next one.